Fidelity has been a thought leader in helping Canadians think about their retirement through leading research and analysis. Released last month, the 2021 Fidelity Retirement Report was out and providing key insights into how Canadians are preparing for retirement, especially in these uncertain times. We're going to be looking into today what are some of the long-standing and emerging factors affecting Canadians' retirement planning and how the pandemic has changed the view on retirement and in which ways. We are joined today by the authors of this year's report to share the highlights of the research, the value and benefits of working with a financial advisor. We'll introduce you today, or reintroduce to you, Vice President of Tax and Retirement Research, Peter Bowen, and Director of Tax and Retirement Research, Michelle Monroe. We're also joined today by Quinn Flaherty, who is Research and Thought Leadership Manager, who's worked closely in supporting Peter and Michelle with this report. Welcome to each of you. Great to see you.
Thank you, Pamela. Good morning, everyone.
Good to be here. Thank you.
Good to be here. Thanks, Pamela.
Very glad to have you all join us here. Peter, I'll begin with you because I'd like you to sort of take us through what we're all living and ultimately how, giving some highlights on how that's changing things. COVID-19, retirement planning, is it still affecting retirement plans? How is that ultimately sort of playing out from what you observe?
Pamela, the answer to that is a resounding yes. Certainly what we found in our survey is there are a lot of implications to Canadians' retirement that we've discovered through our survey. For instance, we've close to a third of Canadians have seen a drop in earnings, although that's actually improved from the prior year. It's having an impact on earnings, although in some cases a positive impact. In fact, if I could characterize this part of it, I'd say Canadians are spending less and saving more. They're more optimistic than last year, though, so that's a good thing. We've seen a jump in those who are expecting their financial well-being to improve over the next year, and a corresponding drop in those who are expecting it to deteriorate. So again, that's good news. And as well, I'd like to say that the pre-retirees, all Canadians really have a positive outlook on life and retirement. And for pre-retirees, 68%, so about 2/3 of them, feel positive. And that takes a big jump for those that have a written financial plan. In fact, almost 90% of pre-retirees have a positive outlook on retirement. So I think generally we're encouraged. So yep, the pandemic is impacting Canadians' retirement and retirement planning. But overall, mostly we're finding it's on the positive realm of things, surprisingly.
I mean, that is kind of surprising and interesting. I think you're going to introduce us to a slide here, but you spoke about, expectations and essentially how pre-retirees are feeling, and as you said, sort of positive. Is there any change in sort of the vision of how they're looking at retirement? Maybe, what it adds up to ultimately, and you can take us through that first slide if you like.
Absolutely, and another word I might throw in there is resilience. Right? Canadians seem to be resilient. If we take a look at our first slide, we asked specifically about, has COVID changed Canadians' vision of retirement? And you can see that for both pre-retirees and retirees, the answer is, yes. For pre-retirees, 43%. So that's a pretty good chunk of them. A much larger number for the pre-retirees, saying 73% has changed how they expect to live in retirement. And I should note that that's for the retirees. We asked about a permanent change. So this is not just, hey, has it changed how you're living right now? No, it's how they expect to live in the future. And the retirees, we know they're frustrated. They've got that inability to travel, inability to see family and friends. So that's having maybe skewing the view, shall we say, but it's definitely, also changing their long-term impact of their expectations. For pre-retirees, they're also telling us that things have changed in terms of their views on what matters. And I'd look at that and say there's more of a focus on family and friends. There's more focus on intangibles. So that's what we're hearing from those pre-retirees.
Yeah, that's totally fascinating. Michelle, is it true, the great resignation and sort of this discussion that those approaching
Hello and welcome to Fidelity Connects, the Fidelity Investments Canada podcast, connecting you to the world of investing and helping you stay ahead. Portfolio manager Kyle Weaver joins the show today for a look at the U.S. equities investment landscape as we head towards the end of 2021. For Canadian investors, Kyle manages Fidelity U.S. Growth Opportunities class and is a co-portfolio manager on Fidelity North Star Fund, alongside Joel Tillinghast and Dan DuPont. Kyle shares how he is a growth manager who believes in deep value and focuses on finding the undiscovered future blue-chip companies. Additionally, long-term growers and resilient growers who prove to be very cheap on a 3 to 7 year view are Kyle's ideal investments. Today, in speaking with host Pamela Ritchie, Kyle shares he is finding value-based care and healthcare a promising area. Also, Kyle is looking at companies that combine e-commerce and brick and mortar together, sharing that companies that allow the consumer to buy online and pick up in store, and do it well, are becoming people pleasers. Additionally, although he doesn't get caught up in macro trends and remains focused on stock picking, Kyle shares he is seeing powerful macro factors that are important in the short term, such as timber, oil, and copper prices, interest rates, shipping congestion, for example. He looks at what's just short-term noise and what may be here to stay, while noting he aims to take advantage of this noise while remaining a disciplined investor. This podcast was recorded on November 2nd, 2021. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments.
Hello and welcome to Fidelity Connects. I'm Pamela Ritchie. It's been about a year since the vaccine trade kicked off, and the markets have been up and down and round-tripped in certain sectors over the past 12 months. As 2021 comes to a close, investors are reflecting on how various styles and factors have performed this year and how they could shape investment strategies in the weeks and months ahead. Providing us today with an update on where he is finding opportunities in U.S. growth, As we look ahead to this new year, we're very happy to be joined by Kyle Weaver. Kyle, great to see you again. Welcome.
Great to see you, Pamela. Thanks for having me on.
Kyle, you're not the only or the first portfolio manager who uses sort of a style of buckets within your overall process. That said, it would be very interesting to know exactly right now how that process is sort of playing out for you. Can you take us through it a bit and ultimately, which of the buckets you're kind of more focused on at this point?
Sure. And just so the buckets make sense to everybody on the call, the overarching theme, regardless of what bucket you're in, is I am a growth fund manager that believes very, very deeply in valuation. So what I'm looking for in a stock, if it's going to go in any of the three buckets, it needs to be very, very cheap on a 3 to 7 year view, like a low single digit price to earnings multiple, or trading at sometimes it's certainly under 10 times free cash flow or EPS over on a 3 to 7 year view. The way that you get there is different, and that's really what determines which bucket I think of the business model as being in. On the most productive side, oftentimes I would say, and the growthiest side is what you might expect a growth fund manager to be interested in. They're the undiscovered future blue chips of the world that hopefully haven't yet been uncovered by the rest of the market, and I call those a breakthrough growth stocks. They oftentimes are growing very, very fast in large markets with profitability or business model attributes that are misunderstood and masked by the level of growth or the investments that they're making. So they screen as looking very expensive or unprofitable, but you can do some work and sometimes come to a level of conviction on the unit economics there and see those stocks as being, extremely cheap if business works out. They tend to be smaller and mid-cap. Many of the fund's biggest successes have come from finding names in